Hi, good morning. Welcome to Morning Kappa. Here we come to week 5 of April with futures. As usual, before we begin, I would like to highlight a disclaimer. Trading in futures and options involve a high level of risk due to leverage and may not be suitable for all investors. This presentation is intended for educational and informational purposes only and does not consist any recommendation to buy or sell any financial instrument. Please consult your licensed broker or advisor before making any trading decision. At the start, the market has shifted into a neutral gear this week. After a few weeks of wild price swing, investors are slowing down. The main reason for this caution is a new diplomatic snap, where Iran offered to reopen oil shipping routes if the US ended the war and lifted its naval blockade. But they wanted to push the nuclear issue aside until later. President Trump rejected this approach, insisting that the Iran nuclear program must be part of the deal. This disagreement has killed the recent optimism and put investors back into wait-and-see mode. And precious metal, gold, silver, and copper, these have seen the biggest drop, shifting to a negative trend. Technically, these prices hit a ceiling and has been pushed back down. Stock markets such as US and Japanese market Nikkei have paused their recent rally and now neutral, entering a correction or cooling off period, and Asian market are following up this lead where the China A50 is dipping while the Hong Kong market remains stuck in a sideways trend. Oil remains a news-driven asset while the long-term trend is still positive. It has settled into a neutral daily profile as it waits for its next headline of Iran standoff. And agriculture sector is the only one showing fresh strength, and soybean and corn has shifted to a positive trend, standing out against the general market slowdown. Recently, gold has been in our radar. And gold has come under pressure from high interest rate and profit taking. Prices were rejected at the key resistance level of 4866, leading to a decline of 6% from roughly 4866 to 4560 yesterday. The break below the rising channel signal, but that upward momentum has weakened from a technical perspective. Support is found around 4580 level. Any rebound from here may not be a smooth swing. Next, the next one that is under our radar is crude oil. Crude oil futures yesterday climbed above 101 per barrel, reaching a two-week high as a stall effort to resolve the US-Iran conflict and reopen the Strait of Hormuz keep markets unsettled. So now in the ninth week, the conflict has driven energy prices higher and disrupted supply across key markets. The International Energy Agency has warned of unprecedented supply shock alongside rising risk of a demand slowdown. Slow through the Strait of Hormuz, normally accounting for roughly about 20% of global energy consumption, remain effectively halted, sustaining upward pressure on prices. As a result, prices are currently retesting the key level at 102. If the market support above 98, if this level is breached, the next resistance to monitor is 105. Next on our radar is copper. Copper electric integration is a strong long-term theme. The immediate trend is negative to neutral. The failure to hold above 6.15 level suggests a retracement is necessary to find fresh buyers. We are playing the micro headwind until the US dollar stabilizes. So let's audit whatever we have done. Previous 2 weeks, we had one call with a break even and one call with realized loss. Micro Bitcoin, the price successfully reached our first target. However, after we adjusted the stop level to the reference price, the market retraced, resulting in a break-even outcome. The next one is soybean. Our position at soybean was stopped out, resulting in a realized loss of USD 450. Here it comes, our future market call. We anticipate a negative chart setup for micro copper. And the initial investment is USD 1,320, and the reference price is at 5.9735. Potential profit is at 5.6890. This we are targeting a gain of 711, and potential stop loss for this is above 6.1. So the potential loss is capping at USD 316.25. The risk and reward ratio for this call is 1 to 2. And the next call is micro Bitcoin. We anticipate a positive chart setup for micro Bitcoin. The initial investment is USD 2,058. Reference price at 75,300. And the potential profit we're targeting is 79,000 and 84,000, targeting a gain of 370 870. So stop loss is below 73,000. The potential loss is capping at USD 230. So the risk and reward ratio for this is up to 1 to 3.5. So if you have, we have discussed today as sparked your interest, there has never been a better time to start. We are currently rewarding new traders through our Trade with Passion 2.0 campaign, where you will enjoy zero brokerage fee if you begin trading within your first 30 days. Well, every trade that you place will also automatically qualify you for another Trade and Win campaign, giving you a chance to win a Tesla and a monthly iPhone 17 giveaway. Reach out to us or drop us an inquiry to our RHB TradeSmart website to get started. Lastly, we are delighted to invite you to a special gathering on Saturday on the 9th of May at a Nexus Connection Convention Center in Bangsa South, with registration beginning at 9:15 a.m., where three distinguished speakers, namely Daniel from CME, our Joseph from Head of Research, and myself will be sharing insights on the market trend, market trading opportunity, strategy to help you navigate today's dynamic environment. And we warmly welcome you to join us for the engaging session. I think that's all from me. Thank you for your time, and I'll hand over to Joseph. Thank you.
Okay, right. Morning, everyone. Looking at the Hang Seng Index, we can see that the index have been drifting lower as the time goes by. And like what Meagan have said, right, yesterday we have learned that this Iran have offers to reopen the Strait of Hormuz, citing that their economy is on the brink of collapse. And so on the this Hang Seng, right? If it these corrections were to continue, right? It may move towards 25 100 points and followed by the lower support at 24 500 points. And on the upside, resistance remains at this 26 600 point level. We'll keep a bearish trading bias until the Hang Seng manage to close above this 26 600 point. And over today, right, at the US, I think the attentions will be on the Fed interest rate decisions. As of now, I think the voice is to have no cut, to maintain the rate at 375, right? If you look at the December consensus, what the market really want to study is what's about the rest of the year, right? I think some time ago, right? You look at the you have this some time ago, you can see that about a month earlier, right? The market was looking at 3.5 or 3.75. There will be at least one rate cut this year, right? But as of this morning, right, you can see that 78% thinks that the US rate will at between will be at 375, which means there will be no rate cut for this year. So nevertheless, we shall see what's the speech by Powell, right? It could be uh, by Powell this evening. What is the his view on the market, and that may actually move the market at the later part of the U.S. trading sessions. And as of recently, we do see that the oil have been moving up and gold have been coming down. And in terms of the US stocks, one stock that caught my attention is Halliburton. Um, about a week ago, they have actually published above expectation results, and the share price continued to move upwards and breach the 40 US dollars resistance. So if the trend continue, it should test next resistance at 42 and followed by 44. Downside support is 38 and 50, right? Secondly, we have Coterra Energy, right? That have operations in the oil and gas, right? And the share price also moved above 34. They are going to announce their results on the coming 30th of April, right? So today there's one more day before the results going to announce. So based on currently the technical setup, right? The Coterra is showing a bullish setup, potentially to move towards 36 and followed by 38. Downside is at 32 support level. Now, FKLI yesterday have climbed above 172.20 level. So as such, we have changed towards bullish bias on the FKLI. Now, meanwhile, FCPO, we continue to stay on the bullish bias despite that you have breached 450 level. So downside support remains unchanged at 4,004, which is our stop loss point. And as for the Malaysia counters stocks that we'll be looking at, right? One that actually caught my attention is Perdana Petroleum, one of the trading stocks that we have published on Monday morning. Right, you can see that Perdana continued to move upwards, and as of yesterday, it crossed above 21 cents, and next resistance will be 22 cent and a half, and followed by 24 cents. Downside support is at the 19 cents. Now, yesterday, one of the stocks that also have a lot of trading volume is actually Haptic, right? I think yesterday, most of the traders are looking at the property stocks, but one of the commodity stocks or the steel related counter Haptic, right, have experienced a very strong volume yesterday. It jumped above 30 cent and a half, and right now I'm moving towards 32 cent and a half, and followed by 34 cent and a half. Right, downside support is at 28 and a half. Now, Monday, we also mentioned about Gamuda, right? That may have a corrections on Gamuda this week. However, look at the price actions on yesterday, Tuesday sessions, right? A very long bullish candlestick have emerged and reclaimed the territory above 4.40. So overall, based on yesterday price actions, we should see that we can conclude that a very strong base formed between 440 and 380, right? This latest positive price actions, I think, are likely to do with the insti funds. They're actually buying very aggressive in the market lately, right? You can see that for the past 1 week, despite that overseas there is some negative news on the market, but our FBM KLCI and overall market continue to move upwards, lead by the tech stocks. And yesterday was property counters, and probably right market will relook again at their construction stocks that you can see that this week uh, our report have mentioned that the DC demand is still very strong in Malaysia right now. So based on these price actions, I think upside could move towards 470, or even if the momentum sustains, it may move towards 5 ringgit. So as of this, right, Gamuda is showing a very strong price actions right now. As for this morning, trading stocks, we have the Telecom Malaysia. This is the after it have break past the 7 ringgit and 60 cents. Based on this momentum, potentially it will move towards 8 ringgit and followed by 8 ringgit and 25 cents. Downside support is 7 ringgit and 35 cents. Then on we have MRCB, Malaysian Resources, break past the 33 cents resistance, heading towards 36 and followed by 39. And downside support is 30 cents. So we have two breakout stocks this morning. Firstly, the Telecom Malaysia and followed by MRCB. So I stop here and pass on to the next presenter. Thank you.
Okay, thanks, Joseph. Morning, everyone. Let me continue with two consumer results notes. I'll start off with Nestle. We are maintaining our buy call and target price of 130 ringgit. Nestle reported their first quarter results yesterday, and the results came in within our expectation. Core net profit of 193 million was up 20% year on year. If we look at the numbers, first quarter sales was grew 6% to a record high of 1.9 billion. This is very much underpinned by the solid domestic consumption and growing export sales. Gross margin wise has also expanded to 31.9%. This is the highest level in 2 years, and this could be reflecting or suggesting a more favorable input cost and forex. With OPEX well under control and the impact of operating leverage, we saw a 20% jump in core net profit to 193 million. We made no changes to our earnings forecast post results, and target price remains at 130 ringgit. We continue like Nestle as we look forward to more sustained earnings recovery ahead on stable volumes and moderating commodity prices, and stronger ringgit should lend further support. So all in maintained buy with unchanged target price of 130 ringgit. The second I have for today will be EcoShop, which reported their 9-month FY26 results yesterday as well. Their year end is May. Core net profit of 192 million was up 23% year on year. This is at 75 to 76% of the forecast. And if we look at numbers, sales was 9-month sales was only up by 2% to 2.1 billion, despite adding 80 net new store, which represents a 20% increase from the outlet store base last year. And this has a lot to do with the persistent same-store sales growth weakness so far in the 9 months since the price increase in April last year. Having said that, the price increase has expanded the gross margin quite significantly by 5.8 percentage point to 32.8%. This more than offset the rise in OPEX, mainly on higher minimum wages. Consequently, we saw net profit jump by 23% to 192 million. Going forward, we believe the favorable same-store sales growth base effect should start kicking in by fourth quarter, with fourth quarter last year being the first quarter to record negative same-store sales growth. It was negative 8% last year after the price increase. Meanwhile, we believe gross margin should continue to hover at a third quarter level as there will be some impact, cost impact from the Middle East conflict in the form of higher freight and input costs that will cost EcoShop about 1 million a month. But this should be partially mitigated by the increasing scale of operations, favorable forex, and rising house brand contribution, which commands a better margin. Such margin buffer should put EcoShop in a strong position to hold its prices amidst cost inflation, and this could potentially reverse some of the negative impact of the price increase by closing the price gap versus non-dollar store competitors. Store expansion wise, 100 new stores are expected to be open in FY26, and the same target has been set for FY27. All in, post results, we make immaterial changes to our earnings forecast of less than 3%, and we find after we fine-tune our sales and margin assumptions. And correspondingly, we tweaked our target price slightly to 180, maintaining our buy call on EcoShop. Let me pass on to the next speaker, Kok Wen. Thank you.
Good morning, everyone. Yeah, so today we have a report on ST Setia. We are downgrading the stock to neutral from trading by new target price is at 1 ringgit and 7 cents. So management has set a 4.6 billion sales target for this year, but we are cutting our 26 to 28 earnings forecast by 7, and 10%, as we expect Setia to be more vulnerable to cost pressure led by diesel price hike and hence more expensive building material prices. Recall the company's earnings in FY24-25 were largely driven by hefty land disposals, while development margin was already fairly weak due to operational inefficiencies. Therefore, as land disposals are expected to be lesser this year, earnings for this year, FY26, should be weaker from last year. Note that there's only one outstanding transaction worth 274 million to be completed this year, and this is the land in Semenyih sold to Ma Sing. From our recent meeting, management indicated that its intention to penetrate the industrial development space further, joining the bandwagon of its industry peers. Instead of acquiring new land, new industrial projects will be developed jointly with landowners, especially in the Klang Valley and Johor region. In the northern region, Setia already has rezoned 483 acres in Setia Fontaines to industrial land. And last year, the company signed an MOU with PDC to jointly develop 250-acre industrial park in the area. While the growth strategies is reasonable, management's execution seems to be lagging, and hence earnings impact will likely take some time in our view. Setia is also planning for its REIT listing in in 2027. 8 commercial and retail assets have been identified as the potential properties to be injected into the REIT, with a combined value of about 2 to 3 billion. While the value unlocking exercise is in line with management's asset-light strategy and should be viewed favorably among investors, the quality of the asset portfolio is relatively less attractive in our view compared with other listed REITs with bigger market cap, and also some of the upcoming new REITs that will be listed in the pipeline. So overall, we are lowering our target price to reflect the prevailing market headwinds arising from the Middle East geopolitical tension. Our new target price is based on a larger 65% discount to RNAV from 60%. We are downgrading the stock to neutral. Yeah, that's all from us today, and I hope you have a good trade today, and we'll see you again tomorrow at our RHB Morning Cuppa at 8. Thank you.